That's right, and I'm excited to welcome on our next guest, Mike Bowden. So Mike, thanks so much for joining us this morning.
Hey, Anthony. Good to see you.
Good to see you too, Mike. So Mike, you're the head of Rail Intermodal Solutions here at FreightWaves. Let's jump into this topic. We're talking about rail, intermodal, and CPG earnings. Let's jump into the first one, rail and intermodal. What are your expectations going into this upcoming earnings season?
Yeah, so this is going to be a big week. Sort of the beginning of earnings season. We have some heavy hitters. JB Hunt, CSX, Union Pacific. Those two big Class One railroads, and then we have GATX, which is the big leasing company leases rail cars, and then you have Knight Swift. But really, I think JB Hunt will be an interesting one to see if the tone that they had from the last earnings call changed any. I mean, you sort of recall when they reported their first quarter earnings. Shelley Simpson, one of the executives there, said that the pricing was about as strong as she's ever seen it in her entire career, and was really just sort of adamant that the pricing power was in the carrier's favor. It'll be interesting to see if there's any sort of backing off of some of those comments. With the economy slowing some. Also, be great to get an update on the rail congestion, particularly on the Burlington Northern Santa Fe, which is the Class One railroad that JB Hunt uses in the West. And when you look at the surface transportation data for service for things like number of trains held, it's been worse on BNSF than Union Pacific in the West. So it'll be interesting to see if there were loads that JB Hunt was not able to carry. Because of service issues. I'm sure there were some, and it's maybe a question of how many. But even with that, kind of as background, I think the company is going to post a strong second quarter because domestic intermodal volume still up. During the second quarter, the contract rates, the market, domestic contract rates, that market that JB Hunt participates in its largest segment, those are way above where they were last year. So, still think the company's going to report a nice second quarter. Whether they moderate their outlook or not is maybe another question. The railroads themselves, CSX and Union Pacific, when they report later this week, those could be potentially interesting also. These earnings calls are ostensibly for the investment community, but I think now more than ever, the railroads are speaking to a broader audience. They're speaking to Congress. They're speaking to the Surface Transportation Board. They're speaking to the individuals that were just appointed to the presidential, emergency board on, dealing with labor. They're going to try to find some middle ground maybe on labor. So all of those things I think is going to be, take focus away from, the operating ratios that have marched ever lower and put it a little bit more on sort of what are these rails going to do to improve service? How are they going to hire enough people? How are they going to debottleneck the West Coast and the inland terminals and intermodal facilities? So I think those will be, potentially, interesting, and it'll be interesting to see if the rails actually give guidance for, more moderate margins, at least as they take on costs to hire more people.
Mike, I think that's a really interesting point that you bring up about kind of the changing audience for the earning calls and then how those earnings informations are adjusted to account for that. And do you think that we're going to get to a point where that audience ever changes to maybe kind of some consumers and some of the general public? Do you think that we'll see a point where the general public is tuned in enough to intermodal problems or intermodal solutions like they got into the port situation to where they care about this, and then you see another change in tune from these companies and how they're reporting?
Yeah, I think it's possible. I mean, there's always, those earnings calls are open to anyone, and like Union Pacific is one of the most widely held stocks. So there's a lot of individual investors that own Union Pacific in their retirement fund just because it's a great long-term holding, and it's been a great stock the last several years. So, and then also, if you're just interested in the overall economy, the railroads are great ones to listen to because they haul commodities and materials and finished goods. They just touch so many different sectors of the economy. So if you really want to know what's going on, I think following their expectations for volume gives you an insight into what's happening in the broader economy, and the AAR reports the carloads every single week, and so you can see in pretty close sort of high frequency type data, kind of like we have at Sonar, what's happening in the economy.
And Mike, you don't just have your finger on the pulse with rail and intermodal, you're also covering CPG. What are your expectations looking forward for that segment?
Yeah, so CPG, I mean, sometimes, I like to look at, okay, what do they say this quarter versus, say, last quarter? Has the tone changed at all? And with CPG, they have, all those companies have said that the elasticities have been less than they have been historically, or less than you would expect, given how high prices have risen. So it'll be interesting to see if there's any, change in that sentiment. It'll be also interesting to see if the retailers are giving any greater pushback to the CPGs now that commodity prices, I don't know if they've necessarily fully cracked, if we can say that, because I came off their highs. I know they've rebounded some, but the steady march higher of commodity prices, maybe that's over. So I think the retailers pushing back more on CPGs that are trying to ram through more price increases. So I think those relationships have gotten a little bit more contentious. So that'll be interesting to see comments there. And then and a CPG's ability to maybe improve the margins actually as they bring more of their manufacturing in-house. They had to do a lot with contract manufacturing, outsourcing manufacturing during the pandemic because their volumes were at such a higher level. If their volumes, let's say, decline 4 or 5% because of higher prices, that can actually help the overall productivity of manufacturing. So I think that's something that's a positive for them.
So I think when we talk about Q2 earnings coming out, a lot of companies also kind of roll in their second half of the year predictions and almost their peak season predictions when we start talking about the end of Q2. Is there anything that you're expecting to see out of these CPG companies when they start talking about the back to school season and then eventually the peak season? Do you think that there's anything that they really need to be paying attention to as we move into the second half of 2022?
Yeah, with CPGs, I don't know that they're going to have any big prognostications of demand, other than to say, well, the elasticities are more or less than they typically are. I think maybe the thing that will be interesting for the second half predictions will be, are we really going to have a peak season with shipping? I mean, it seems like with inventories being high, that a lot of that's been brought forward. So I think it's reasonable to assume that the peak season for transportation is maybe going to be muted and is kind of been pulled forward. So I'm looking to see if companies are on the same page there.
Mike, thanks so much for joining us this morning. You're a busy man. You also do the stock out. When time can we expect that to come out?
That comes out at 2:00 Eastern today, every Monday.
All right, Mike, and you can catch that on FreightWaves TV. We'll talk to you next week, and then we'll have a great rest of your week.
Okay, see you guys.
All right, we're going to take another quick break, and then we'll be right back with more FreightWaves Now in just a few minutes.